Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Ed Carson here with a breakdown of the action in today's session, Friday, September 1st. And Ed, it was a big week for the bulls.
Yeah, it was. Even though we sort of paused late in the week, it was still strong gain for the indexes and leading stocks. Want to take a look at Baker Hughes, Samsara, and Tesla to wrap up the week.
Okay, we will get to those stocks. But first, let's take a look at the major indexes. The NASDAQ down on the day, but basically flat, just edging lower. We had on the upside the Russell 2000 with a strong day, up 1.1%. So small caps outperforming. The Dow up 0.3%, the S&P 500 up 0.2%. So even with the NASDAQ dipping slightly, it was a downside reversal today, but holding right above 14,000 for the week. We saw some notable technical action, Ed.
Yeah, so you look at a weekly chart and you go, like, that's pretty darn strong. So even though, yeah, we sort of went nowhere after Wednesday, Tuesday really was decisive. Just to go back to the daily chart, I mean, just how the market was just trying as much as possible to make this easy almost. It's like, here we go, blasting through the 50-day line. It's a follow-through day, breaking a trend line. So there was a lot of things there. Then we had these other days, incremental gains with more stocks coming out, not a crazy amount, but enough to give you, say, like, oh, get into the market a little bit more, add a little more exposure. And even now, there's still more stocks setting up. So this market seems to be trying to get people to get into the market in a disciplined way. So a lot of positive action. And, you know, we could pause here, but we don't have to. I mean, we're not like extended or anything, but if we pause, we'd see more handles, we'd see some more bases. So that would be fine. I think the one thing is just to remember that we could always come back down. I mean, the Dow is testing its 50-day line, and the NASDAQ is really only like 1% above that level. I mean, so it wouldn't take much for the Dow to go under, and it wouldn't take much for the S&P and NASDAQ to go under. I'm not saying they would. They could test it and then bounce back. But you can imagine the mindset. If we went through below the 50-day line and you could see it and close below it, all of a sudden this rally would start to look weaker. So that doesn't seem to be what's happening. I mean, it doesn't seem to, there's no real evidence of that, but it's just something that investors have to keep in mind. It's not like, you know, when you go on a trapeze, you know, wire, there may not be a net. You might think there's a net, but there may not be a net below you. So just keep that in mind as you trade.
Right. So that follow through day on Tuesday feels pretty pivotal, but it's not a fail safe. So for starters, let's see if the NASDAQ can hold the 50-day. Then we'd be keeping an eye on the low of the follow through day, because if we close below that, that doesn't mean the rally is over. We'd have to close below that low from 818, but it wouldn't be good to see a close below that follow through day low, because our research shows that if that happens at a quick clip, that increases the likelihood of a rally's failure. But for now, we are getting a lot of positive signals to be adding exposure, as you said.
That's absolutely right.
Let's take a look at the Russell 2000, which we mentioned outperformed today, got above its 50-day moving average and got above 1900, which is great. But a breakout area wouldn't happen until 2000 for the Russell 2000. And that's an area that hedge fund manager Jim Ropel said he has his eye on when he joined us on IBD Live this morning. So a good week for the Russell, up 3.6%. Now can we get it to break out? That would be the next big test.
And this is sort of, it tells you something about the breadth of the market. I mean, it was a strong week for breadth. And even today, with the market sort of going nowhere, it was pretty strong advanced decline line beat. But at the same time, you can see how far, we have to go to get above these levels. And the Russell was boosted probably by banks, by some of the interest rate shifts today. But nice week. But yeah, a lot more to go with this one.
You mentioned interest rates. So let's take a look at 0TNX reversing higher here. So do you think pretty impressive to see the NASDAQ just edge lower with rates going back up, Ed?
I think so. And that was, because that took out a big chunk of the gain. And a lot of the loss of the NASDAQ wasn't because, again, the advanced decline line was strong. A lot of it was Tesla, which we'll look at in a little bit. It was somewhat NVIDIA, a few names like that, because QQEW that was actually positive. Now that I think about that, so that one actually rose with the yields rising. So that was very impressive. Yeah, the fact, you could have imagined that we would have given a lot more back given that spike in yields, given the spike in the dollar, which was pretty powerful today. That had come back down. So the yields falling and the dollar falling were a big reason why Tuesday happened the way it did. And so then with the dollar like that, so yeah, I completely agree with you. It was pretty darn resilient, the way we acted today.
Right. And Jim Ropel also mentioned oil. Definitely something to watch, Ed. USO up 2.5% on Friday alone for the week, up 6.2%. And that looks like a pretty strong breakout.
Yeah, pretty clear breakout. We paused for a couple of weeks. So a lot, the oil prices paused for a little while. So the oil stocks paused for a little while. Well, oil had a huge week. I think it was over 7% on the actual crude number. So really moving higher. And obviously we're going to take a look at Baker Hughes. And sometimes when oil is up, that's not a great sign for the market, for the rest of the market. So something to keep in mind. But this is definitely, that was a very healthy pause, it looks like.
Mm-hmm. And let's take a look at XLE, the energy sector. This also looks like a breakout move on Friday for XLE, Ed. No surprise with what oil is doing. And a couple other sector ETFs. Here's IGV. I'm going to go to the weekly charts for these. IGV up 4.6% today. A nice move above the 10-week line. SMH, which tracks chips, up 4.8%, getting back above its 10-week line as well. XHB, notable move here for the home builders, with XHB up a nice 6.2% to get back above its 50-day line. And then we have XLI, industrial stocks, back above the 10-week, up 2.1% for the week. SLX, this is steel, a nice week here as well, up 4.9%. Looks like in some volume, bouncing off of the 10-week line. So if we're talking about a broad-based rally, Ed, does it feel like we're getting it?
We are getting it. I mean, you'll see more because here's RSP still. It had a positive day, better than the S&P, though it's certainly not decisively above the 50-day line. I'd like to see this one get more. But yeah, there's definitely breadth, and that's something nice, is that there are a lot of stocks that seem to be setting up in growth and outside of growth. So there'll be a lot of opportunities if this market keeps going higher. You haven't missed the train. I mean, there might be some of the first class seats might have been taken, but there should be a lot of seats if this market goes higher.
Yeah, we'll have to see if it can continue. In the oil and gas space, let's take a look at Baker Hughes. This is BKR, finishing up 1.7% on the day. Volume did come into this stock above average on Friday and Thursday as well. Let's see, the closing range was about 38%. So maybe a little disappointing there after that early strength, Ed. But it did clear this tight action. And I think it was a pretty decent day for the stock. Obviously, we would have loved to see it close at day highs.
Yeah, and also that closing range is based off of its intraday highs. And so if you think about the true range, because it did gap up, I mean, it's not a massive gap up, but it probably closed in the upper half of its range
From yesterday's close.
From yesterday's close. So yeah, I mean, yeah, you always like to see closing at the top. But if you look on a weekly chart, this is where you really can see, because it's like this sort of looks messy. It looks like a short consolidation, but there's been a lot of tight action there. So you could basically treat that as a flat base. You could also treat this area as a handle to a mammoth consolidation, however you want to look at it, but and not too far from the 10-week line and so on. There's a lot of reasons why you could have gotten into this. Pretty strong numbers here. Again, oil is going up. There's demand for all this equipment, demand for oil services, definitely. And this is a big name, so it's probably not one that's going to shock you. Some of the other names have had some pretty big, wild intraday swings. This one, it can go down a lot when things go badly. If oil prices tumble, this is not going to go well. But on a day-to-day basis, it's not going to probably have that stock-specific news that's going to just go, wow. So there's a lot of reasons why investors might want to take advantage of this one.
Yeah, up 4% for the week in above average volume after about 5 or 6 weeks or so of quiet volume there. And I think another thing about this one, Ed, is this is on my Magic 8 screen. So it does meet a lot of fundamental and technical criteria, 80, a minimum 80 composite, minimum 80 RS, minimum 80 EPS, and it's beating all of those. I mean, this has a 99 composite rating and some strong fundamentals here, and relative strength is looking pretty good. So definitely a setup to watch. It seems like the next level to the upside that could pose some challenges would be just shy of 40. So if it does continue to run up, we'll have to see how it handles those prior highs around that level, Ed.
Yeah, that's the next resistance, but it's acting great now.
Yes, it is. Let's take a look at Amazon was our
IoT.
stock of the day, but you wanted to take a look at IoT. Let's go to IoT. Up 22% for the week. Some strong volume. I like that RS line blue dot.
Yeah, this one blasted out. I mean, and it gave some opportunities. It came through on earnings, went through above this double bottom base. It's technically in range, though it's getting high in that buy range. It is, though, feeling a little extended from the 50-day line, and maybe this will just power on. I mean, this has had great numbers. I think the time to buy it was that trend line that you had right during, it was looking at it, and that's when it was still pretty close to relatively close to the 50-day line. So there was that opportunity. So you could buy it here, but you could also wait to see if it pauses for several days. Maybe it gets a little bit of a chance, takes a little pause. I don't know, the 50-day line probably wouldn't do much to catch up because it's not really moving up right now, but it would at least provide a little bit of rest. So that might be something you do, but this one clearly showed a lot of action. It's also one reason why you have to not pay too much attention overnight, because this was going nowhere overnight. This was doing, it's like, okay, and it was down, and now, and then this happened. So here we are.
Mm-hmm. Yeah, it's a really great reminder. Overnight action doesn't always translate to the following session. And this was our stock of the day. And we encourage everyone to check out that article. But it's really nice to see the fundamentals start strengthening here for this stock, Ed, and the forward-looking estimates look pretty compelling as well here.
Yes, they do.
And let's take a look at Tesla. So not every stock had an explosive week throughout the week. Tesla down over 5% on Friday with volume picking up a little bit. And there was some news here, a couple of headlines, Ed.
Yeah, I'll go through the news, and then there's some positives on the technical side too. But I just want the news is that first they released in China the updated Model 3. Now maybe some of that news was already priced in because there's been a lot of buzz for that. The pricing was a little bit unexpected. But then on the other side is that then they slashed Model S and X prices in the US and China. I mean, they've really cut those prices in the US. And they also cut the FSD prices. So now
they've been cutting prices, right, Ed?
Oh, yeah, they have been cutting throughout the year, and there's some inventory discounts, but this was like another 15, 20%, so really big cuts that have come in there. And it just sort of undercuts the whole argument that, well, maybe price cuts are almost done. Again, this is the Model S and X. It's not the Model Y. That would be the one that's like that would be really worrisome. But I think that caught people by surprise. And this is another one that really wasn't trading before the open. I mean, it was just sort of flat. It's like, who knows where it was going to go. On the technical side, just on the daily, on Tuesday, it got back above the 50-day line and it held there, but it never decisively broke above it. And it was fine. Look, I mean, it's like after that big day, that's fine. But it didn't quite give that reason, hey, let's get in. If it had just shown a little more strength, I think it would have been more positive. That's one reason to wait for a little bit more. And I will say on the flip side, on the weekly, it held the 21-day line, and then for the week, it still rose. This one is in the low part of its range, so it's not great. You obviously wouldn't have wanted that, but hey, ultimately, it is rising. If this rebounds, if they say, well, wait a second, this isn't so bad, this and this and this, analysts digest all this news, maybe it sets up and blows by the 50-day line decisively, and, that area will look like resistance. But this is why maybe you wait a little bit for that decisive move above that level, even though it's tempting. I want to buy it here. I want to buy it low. Is you never know, when it gets to those levels, not just this stock, but any stock, will it really go through?
Right. And you're right. If it can consolidate here for a little bit and then push higher, once it does that, then it wouldn't look so straight up off the bottom, right? As opposed to if it would have just continued to power through that 50-day line, maybe it would look due for a pause.
Yeah,
So
I mean, exactly. And so I will say, we looked at the fundamentals on things like IoT and Baker Hughes. This one is a little shaker. It has a great track record in the past, but so you can see a lot of numbers in the 100%, 200%. There's reasons why it was going up. Earnings are going to fall this year. There was sort of an odd reason why it rose last quarter. It's going to fall in Q3 almost certainly. Analysts are expecting a bounce, so we'll see how that comes. But there's a lot of questions there. It's not the same story that it was. It doesn't mean it can't have another run, but it's just
a different
something to keep.
picture.
It's a different picture, and there's other names like Li Auto say that are showing strong growth. It was something that Jim Ropel pointed out. It's hard. You can't compare. Like a couple of years ago, you would say, well, Tesla was the one that had those big earnings growth, but now Li Auto has that growth in a way that Tesla doesn't right
And
now.
the price is reflecting that right now.
Absolutely.
Yes. Okay, Ed. So what should we be doing as we prepare for the week ahead? No trade on Monday. We've got the Labor Day holiday. So, hey, I guess it's one extra day for us to freshen up our watch list, assess our portfolios, and get our plan of action together for the week ahead.
I think you got it right there. I think you should be going, especially on the watch list. This is a great time to be doing because a lot of stocks are setting up, and a chance to say, well, where do I want to get in here? And think about what sectors you want to get into, like energy and growth, obviously, but there's other places that you could get into. This could be a time, and like preparing for it. You don't know if the market sells off next week, then you say, well, I'm not going to add things. But if this market continues to show strength, you want to be adding exposure, and you want to be adding it in the right names. And so this is the time. Get that magic 8-ball. Get your screens going so you are ready to go for the coming week.
Right. And I think another lesson from this week is I think a lot of traders could have gotten pretty bearish at that big reversal bar the Thursday prior, whatever day that was, right? Yeah, the 24th. I think there were reasons to be bearish with that bad reversal, the rejection at the 50-day, but we had a follow-through day 3 days later, and that presented buying opportunities, not like kid in the candy store buying opportunities, it sounds like, but there's a reason why you should always have your watch list ready and your game plan ready, because things can move and shift so quickly, and we have to be willing to change our mindset in 3 trading days to be able to go the other direction.
Yeah, that is great. Staying flexible is just so important, and not trying to guess where the market is, but like just see what the market is doing. So we have a great long weekend to hopefully relax, but also do some work for the week ahead.
Yes. And I know your weekend column has a lot of trade ideas packed in it, and it will. And we look forward to reading that along with our other coverage on investors.com. And the team will see you on Tuesday, where we'll talk about more trade ideas, stocks that are looking potentially actionable, the team's market outlook, portfolio management tips, and so much more. That'll be on IBD Live in the morning, investors.com/IBD Live. So we will see you there Tuesday morning. Hope everyone has a great long weekend, and we'll see you back here next week.